On the topic of cattle, it's now time to check in on the markets, and this week joining us is Kyle Bumsted. He's a livestock analyst talking all things cattle. Here's our conversation from Thursday morning. Kyle, good to see you. Let's start with some of the news of the week, and that has to do with live cattle imports from Mexico due to the detection of New World screwworm. What can you tell us on this front, and how's that impacting the live cattle trade?
Well, first off, when we saw the headline drop, obviously the cattle market rallied, feeder cattle market rallied as well too. But about the same time, the cash market took off. So most of the headlines, the stories, the emails, the releases that I've seen from that, they're hoping to, or they're going to be trying to get that open back up for us to be importing Mexican cattle here sometime in the next month. I think it's probably going to happen a little faster than that, but that was kind of that's what they're there for. I mean, they're there for that kind of stuff. I mean, they protected it and they stopped them coming in. The market took off as a result of it, but they're going to open that border back up, and eventually we're going to be taking in Mexican imports again.
Okay, glad to get your perspective on that matter. Kyle, there's a lot of fundamental things out there impacting the trade right now. Don't need to tell you that news, but some erratic price movements too. As we sit here, middle of December, nearing the end of 2024, what are maybe two or three of the biggest things that cattle producers need to be watching?
I think we're going to need to be watching the slaughter pace here. I mean, midweek we had a big plant go down here in central Nebraska, but to round it out, I think the Packers are going to probably be trying to go down to a 36-hour week. And we've obviously got the holidays coming up here, so that's going to be slowing things down as far as production and processing anyway. But going down to a 36-hour week, that could cut our slaughter pace down to around 5.25 to 555, somewhere down in there. And that could back up a few cattle here, just to back up some cattle. And if they do that, that's going to give them just a little bit of bargaining power. So on the technical side of things here, money flow side of things here, I want to remind our producers out there that the fund money, the non-commercials, the algos, whatever you want to call them, algo funds, whatever, they're holding a huge net long in this cattle and feeder cattle complex. And for no reason, they could take their ball and go home. They could start cashing some money out here. It's the end of the year. It's the end of the month. It's the end of the quarter financially, and we could definitely see some volatile swings here in this cattle complex. Now, when we started out the week, we had a big down day, and then Tuesday we had a nice recovery, and then Wednesday a big down day, and Thursday kind of got off on a muted foot as well. And it's going to be very interesting how we settle out this week here. What do the weekly charts look like here once we wrap up?
Kyle, you bring up that point about the funds. Is there any indication they would want to get out of their positions going into the new year?
Other than the fact that they've got a lot of money made in them, not right now. But I'm not a fund manager. But if they get to a certain goal, they will pull the plug here and they will take some money off the table, because who's going to be left to buy it up here if they're holding a huge long position? Who's going to be left to buy it? The small traders are going to come in here and buy it, and usually when that starts to happen, that's when things go the other way. So definitely watching for that kind of activity here. Also watching here this week in particular, we have December live cattle options. Those are going to expire here on Friday at the end of the week, and it seems like that 188 to 190 is kind of an area that they're trying to ping for option expiration. But even bigger number I'm watching is in the February live cattle contract here. 189 to 189.5 seems like we can't quite get through that. And if we do see these slaughter reduction and slaughter pace go down, we do see the cash market back up. We could see cash back up to, maybe back down to 185, and that could push this board down to, 180 somewhere in there. I'm not that bearish, but it could certainly happen just on money flow.
Kyle, I want to talk about the price of calves. Seen several pictures over the past couple of weeks on Twitter. People cannot believe the price that feedlots are having to pay for calves to feed them out here. And to that point, what does profitability look like right now for a feedlot owner?
Well, I could, off the top of my head, I know half dozen, maybe 10 yards that are kind of slowed down their buying just for the simple fact that they're way too high and they don't pencil out there in those deferred contracts. So what those yards have done is they switched to feeding cows, and I think after the first of the year, you're going to see a lot of cows hit the kill, and you're going to see the ground beef market maybe tank on this thing. There's going to be a slug of ground beef hit the market as far as grinds go. So they don't really pencil, and more power to them. A lot of folks are betting on the come right now, especially these light calves. I mean, 4-weight calves, $1,700. That's a pretty good ticket. And I know interest has come down, but I know a lot of producers' interest is still about the same. It hasn't come down that much, and interest is a big expense. And I'm also watching this grain complex too. Like when you look at that March, May, or the May, July timeframe there, that market is very, very tight. There's not a lot of carry out there. So it says we've got some pretty good intermediate and potentially long-term demand in this corn market. And you start putting a little bit of money on this corn market, that could make this thing hurt it could make it hurt quite a bit.
Glad you brought up the grain complex. I was going to get a couple questions about that, but I'll skip those and instead ask you, seasonally speaking, sounds like you're issuing some warnings about what could be ahead here in 2025. And I guess to that point, seasonally, January is not usually a great month for cattle, is it?
Not historically, but the time frame between Thanksgiving and New Year's is typically not a good time frame for the cattle anyway. You've got a seasonal bias where the cattle like to go down. So I am cautious about that as well too. And you couple that with the fund length and the way the charts have been acting here this week in particular. Granted, during this recording we're not closed for the week, so anything is bound to happen. There's a lot of week left in a couple of sessions, but that does kind of fit the bias. It is a little bit tough sometimes. The feeder cattle market generally is on a rocky slope here in the month of December because we simply don't have the cattle going into the index. Now, once you get to January, I've seen it both ways. I've seen January take off and rally, and I've seen January just tank because everybody's getting rid of feeders too. But I don't know if that's going to be the case right after the first of the year here. It's all going to kind of depend on what happens here with the cash market here. And as long as these these deferred live cattle contracts, if they could gain some ground and keep rallying on the deferred fats, then these front month feeders are probably going to be okay. But if we start losing traction in those deferred live cattle contracts, this thing could get real interesting real quick.